to bring up the next speaker. Has a great background in the mortgage industry. Back in the day, he was an executive at Countrywide, which many of you know was probably the biggest originator of mortgages in the US, got acquired by Bank of America. He's a serial entrepreneur. He's built fintech companies and makes a lot of contributions to the Hyperledger community. He heads the mortgage special interest group, which is under the capital markets special interest group of Hyperledger. And he also runs Zventus, a blockchain consulting and services company. They cater to over half a dozen industry verticals in the work that they do. Marvin, it's great to have you here to do a talk on the state of affairs in the mortgage industry. So I'd like to turn it over to you.
Great. Thank you for having me. Definitely appreciate you including me in this agenda. Now, the real test of my technical skills, let's see if I can go ahead and share the presentation that I have set up.
Okay. Yes, you can see your screen, Marvin.
Okay, great. So let me go into slide share mode.
Perfect.
Okay, so again, thank you for having me. Definitely appreciate being part of this agenda. Here's our agenda for today. I'm just going to do a very brief explanation of tokenization. I think this is a very educated group, so I'm not going to dive too much into that. I'm going to spend a bit more time on why tokenization matters, and then we'll do a deep dive into tokenization within the mortgage industry, talk about some use cases, companies within the mortgage industry that offer some flavor of tokenization, how to tokenize a real estate asset, and then limitations and benefits of tokenization. So really briefly, as Tanvir said, I'm the CTO of Zventus, a global fintech solutions provider. I'm also a member of the Hyperledger Foundation, specifically the co-chairman of the capital markets / financial markets special interest group, specifically the mortgage industry subgroup. Our goal is to educate, research, and deploy blockchain technology solutions for the global mortgage markets. We'll come back to a little bit more on Hyperledger later on. Okay, what is tokenization and why should I care? As I said, I'm not going to spend a whole lot of time defining or explaining what tokenization is, other than giving you the following definition. Tokenization is a process of integrating real-world assets with on-chain economies by allocating them unique, digitally recorded, and transferable rights that can be easily audited or tracked to view changes in ownership over time. Granted, that's a mouthful. I'm sure there are much more encompassing and better definitions, but I just want to level set everyone. If you want more detail on the definitions of tokenization, definitely contact me directly and I can go to as much detail as you'd like. Now, what real estate can be tokenized? The types of real property involved can vary widely, including single-family homes, multifamily structures, office buildings, retail spaces, and everything in between. Now, why should I care about tokenization? Larry Fink, CEO of BlackRock, said in March that, quote, the next generation for markets, the next generation for securities will be tokenization of securities. BlackRock had at that point, 8.5 trillion assets under management. That's trillion with a T as of 2022. And while that all won't be tokenized, even just 0.1% of that amount for tokenization would make a whopping 850 million. So almost $1 billion just for BlackRock alone. Similarly, Tyrone Lobban, head of blockchain at JP Morgan's Onyx, last year shared the bank's plan to implement institutional grade DeFi, saying he believes there's significant value for tokenization of assets waiting on the sidelines. So here's his quote. Over time, we think of tokenizing US treasuries or money market fund shares, for example, means these could potentially be used as collateral in DeFi pools. The overall goal is to bring these trillions, again, trillions of dollars of assets into DeFi so that we can use these new mechanisms for trading, borrowing, and lending, but with the scale of institutional assets. So despite these strong endorsements, real estate tokenization is still admittedly, and especially within the mortgage industry, in its infancy. The market is growing at 19.8% compounded annual growth rate. I think the previous speaker had quoted BCG, the Boston Consulting Group, predicting that the tokenization market will balloon to $16 trillion by 2030. They also said that $3.2 trillion of home equity will be held in tokens, again, by 2030. So if you're still wondering why you should care about tokenization, and you probably do since you're listening to me on this webinar, quite simply, a lot of smart people are saying that this is the future and this market is going to be huge. Okay. So how is tokenization being used within the mortgage industry? Before we dive into tokenization in the mortgage industry, I want to call your attention to a 2021 Fannie Mae mortgage lender sentiment survey. How will blockchain shape mortgage lending? One of the survey questions asked the respondents, who were executives within the mortgage industry, is what are the most and what are the least appealing solutions for blockchain technology? In 2021, mortgage executives thought that the most appealing uses for blockchain would be digital wallets and title registry. Note that the least appealing uses for blockchain would be stable coins and tokenization. In contrast, in 2023, one of the most talked about use cases for blockchain in the mortgage industry is tokenization. So you can see how things have evolved even within the span of a couple of years. So how is the mortgage industry using tokenization today? First, as a vehicle for raising funds or providing liquidity. One way is for real estate security tokens that offer an excellent source of capital for the production, acquisition, or extension of real estate property. Another way is to help the mortgage origination process through the use of tokenization within the securitization process. Note that the primary difference between tokenization and securitization is that while tokenization turns all real-world assets into highly liquid digital tokens, securitization converts low liquidity assets into higher liquidity security instruments, which are traded in markets and over-the-counter platforms. We're going to talk about this a little bit more in the upcoming slides. Last thing I wanted to mention are crypto mortgages. I don't think that these are true examples of tokenization, but rather the use of crypto as collateral for a mortgage. But I'm just including them for completeness. Other examples of tokenization include using them to raise money for distressed property by tokenizing those properties in bad condition, increasing their valuation, and selling them on the open market. Also, selling established assets, a decreased investment threshold allows multiplying the number of people willing to buy property, which means you have more liquidity. Commercial real estate tokenization is particularly impacted due to the significant unit price. And the last option on here, creating a real estate marketplace, creating a tokenized real estate platform where you can sell multiple properties, raise money for real estate developments, and enable a large number of users. So let's talk about some specific use cases on how tokenization is being used in the mortgage industry. The first item, in 2022, Redwood Trust subsidiary Corvest announced a $313 million securitization backed by single-family rental loans. These are rental loans. One of the distinguishing features is that the loan payments are tracked using blockchain technology from Liquid Mortgage, and this means that investors can view the loan payment activity on a daily basis. So a lot more transparency. Liquid integrated its solution within a single mortgage servicing company to get payment data. Its platform used the Stellar blockchain, but didn't store any personal data on that blockchain. Apart from sharing payment data, Liquid Mortgage's platform helped with tokenization and due diligence. This securitization was actually the subject of a highly circulated white paper where Redwood Trust noted that there was 100 basis point savings in audit and compliance expense through the use of tokenization. So if you're familiar with mortgage securitizations at all, 100 basis point savings, that is huge. Another couple of examples within tokenization is some of the work from Figure Technology. In one example, Figure released asset-backed securities based on HELOC loans with data stored on their provenance blockchain. It's also using its solution as a mortgage registry instead of MERS, which is a mortgage industry-wide standard. Figure also co-founded one of the most interesting payment initiatives, at least I think, in the banking world, the USDF Consortium for Tokenized Bank Deposits. And another example that's not included on here is Figure received approval for an alternative trading system, ATS, to create a marketplace for tokenized equity and funds. So that's just some of the work that Figure's doing. Another use case is the Home stablecoin backed by US home mortgages. Home is the new cryptocurrency backed by the same mortgages used by governments, insurance companies, high net worth individuals to preserve and grow their wealth. Home is available to anyone in the world with a DeFi wallet. Payments from the loans backed by homes flow back to the holders of the home stablecoin. So you get a stablecoin backed by homes in the US and a part of the payments from the homeowners. Pre-2022, there were several companies that offered something slightly similar, crypto-backed mortgages. I mentioned this in the previous slide. However, since the crypto winter and the issues with Silicon Valley Bank, a lot of these companies have bring crypto mortgages, and quite a few of them have gone out of business altogether. The last use case that I want to go over is a true token from SunWest Mortgage. This is probably one of the most innovative uses of tokenization within the mortgage industry. SunWest Mortgage uses blockchain and AI technology in their mortgage application that converts a pre-approved property-specific loan to a property-agnostic, tradable, non-fungible token, an NFT. A borrower or his broker completes a loan application on their mortgage platform called Angel.ai. Assuming everything on the loan application is in order, including credit, title, verification of employment, all of that, Angel then generates a pre-approval. This pre-approval is then converted into an NFT, and then this NFT is backed by real dollars and guaranteed by SunWest Mortgage. So it's that last part that I think is really important. This approach not only opens buyers and sellers to wider opportunities, but empowers different income bracket parties the ability to present and accept offers with certainty and without the open-ended financing contingencies. So, for example, if I had a true approval and there were 10 homes that I was taking a look at, I can use that to make an offer on all 10 homes simultaneously. Whichever buyer accepted that offer snaps that up. But the advantage to me is I get to be in front of the line of people that just have a pre-approval letter. So I think this is really an innovative use of tokens. Let's go on to the next slide. How else is tokenization being used within the mortgage industry? I'm not going to go over all of these slides here, or excuse me, all of these companies here, but I just wanted to give you a scan of some of the companies that are using tokenization in mortgage and the overall larger real estate market. For example, Roofstock. They were founded in 2015. They're a San Francisco-based real estate investment company. They already have $5 billion in transactions since launch. Another example is Honeybricks. They offer investors an opportunity to gain exposure to commercial real estate. They allow investors to tokenize investments on pre-approved projects, thus providing fractional ownership of assets on the Ethereum blockchain. So I'm not going to go into the others, but if you are interested in some of these other companies, definitely reach out to me, or you can take a look at them by yourself on the internet. Okay, this is, and I emphasize this, a very simplified and generic overview of the tokenization process. If you'd like a more detailed walkthrough, again, please reach out to me. First step, finalize the deal. The factors that influence the final deal: type of assets, jurisdiction, type of shareholders, and relevant regulations. Form the appropriate legal structure and minimize risk. This is really important, especially for real estate. Various options are available for the property owner, and he or she can opt to form either a special purpose vehicle, SPV, become a member of a real estate fund, or take part in a real estate investment trust or REIT. Other legal issues to consider, though, is assess if the tokens that you're using pass the test for security. So, and I'm talking about the HOI, I can never remember how to pronounce this, but it's the test for securities that refers to the US Supreme Court case for determining whether a transaction qualifies as an investment contract. If a transaction is found to be an investment contract, it's considered a security, and it's subject to registration requirements under the Securities Act of 1933 and the Securities Exchange Act of 1934. Also, make sure you take a look at whether it falls under Reg D for exemption for private offerings, and file with the SEC to register tokens as securities if they are properly traded. Another key step is selecting the appropriate token. The appropriate technology. Now, the previous speaker had spoken about some of the blockchain technology variations that are available, but the right blockchain needs to be chosen to create the token. Investors will require a custody solution to store their tokens safely, and the securitized tokens can be offered to investors through primary issuance or trading them. Choosing the right blockchain can easily be another webinar, so we're not going to dive down this rat hole. However, I do want to mention some of the blockchains that we've already discussed in this presentation and the earlier one. The Stellar blockchain, Provenance, and Hyperledger Fabric. But there are clearly a lot more blockchains out there, or you can create your own blockchain, as the previous speaker had mentioned. The last step in creating a tokenized real estate asset is once the token has been created, a distribution plan must be prepared according to the total supply available. Multiple payment methods need to be accepted when potential investors purchase the token, and then you can view the amount of funds available by taking a look at whatever cap table you've set up. Despite the many benefits, the integration of blockchain in the mortgage industry also
Hey, Marvin, sorry to interrupt you, but yeah, I'm just doing a time check. So if you could wrap up in a minute or two, yeah, if you could wrap up soon, I'd appreciate it.
Okay. Sorry about that. I do kind of talk too much. I mean, the thing that I really want to mention on the limitations of blockchain is just for the mortgage industry, the adoption of blockchain and tokenization is a huge technology hurdle. One of the things to consider about the mortgage industry is it's not a leading edge, it doesn't employ leading edge technology. And in fact, I would say it's usually a laggard, but that means that tokenization must work within the existing confines of mortgage technology. I'm just going to go ahead and skip to the benefits. I think since we're all here, we understand the benefits of tokenization and improved capital efficiency, democratization of access to capital, operational cost savings. I think some of the key things to note on here really were mentioned in the earlier one: transparency and security. I did want to mention, as I said, I am the chair for the mortgage subgroup within the Hyperledger Foundation. On Thursday, September 14th, we have Pavan Argawar, the CEO of SunWest Mortgage. I mentioned them on one of these slides. He is a fantastic speaker, very dynamic person. I have a huge amount of respect for him and what he's done with SunWest Mortgage. I encourage you to join us. This is a monthly webinar that we hold under the umbrella of the Hyperledger Foundation. So with that, I know I may have gone a little long. I want to thank all of you. Thank you, Tanvir, and see if